Good day. This is Mark Whitaker with Perpetual Wealth TV. We do some seminars. We contact some of our patrons and ask them if they'll help us teach our students how to actually trade. And today I'm just going to simply show you a very simple solution to trading. And I want to show you some of the EAs that are out there, and then I also want to show you how easy it is to set up and start making money using the foreign exchange program. So let's go ahead and go to a platform, which is going to be the one I'm using is IBFX, and we'll start from there. Okay, we've got the Interbank FX Trader 4 program running. It's a platform. I can enter trades, buy or sell, and I've got the Euro USD. The price on the Euro USD works somewhat like this: that the first of the currency pairs, the Euro, trades at 1, and the USD is the price over here on the right side, which trades right now at $1.25,609. So what we do is we buy the currency from the US to the Euro and then back to the US again. So we're going to get into that trade using our US dollars, and then we're going to get out of the trade and convert back to US dollars, and that's how that works. Alright, so what we're looking at right now is the Euro USD weekly time frame, and you choose that up here with the weekly. You can choose the 1 minute, 5 minute, 15 minute, 30 minute, hourly, 4 hours, daily, weekly, or monthly. Right now I've already got them preset here, so I'm just going to go down here and show you what the Euro USD weekly looks like and what the moving averages are. If you put your mouse over the moving average, you can, let's see if we get, there we go. Moving average 100, the moving average 40, the moving average 21, and we have the moving average 5 and the moving average 5. Now I've shifted this one over so you can see that when the 5 is opening up, in which direction it's opening up to. Here, this line crosses this one, and so it's moving to the upward side, which is what this is doing here. And this is showing 5 bars back. So we're here on this one. So 1, 2, 3, 4, 5. So we start out here, and you notice there's a little flat spot here. So there's a little flat spot here. That's what shows that. All right, so just kind of give you a quick demonstration. We're going to look at the Euro USD daily. And then we're also going to look at a couple of things. When I see some things that I know, I'm going to just kind of say them out to you. And I notice that there's a wick here that's longer than the wick on this side, and the body's kind of short. So that's pretty close to a doji with a shadow that suggests that the market is going to reverse. So if I was to actually just kind of draw a horizontal line right here, I would expect that after this doji, or it's not really quite a doji because there's a little bit of a body in there. When a doji happens, there's no body here. There's an entry level and an exit level. I'm sorry, this is the entry and this is the exit. This is the entry and this is the exit. So it exited here, entered here, exited here. So we had a little bit of growth here. This was a little bit longer than this one, but it's not as much as it is like on this candle right here. So we see this, and we see a longer candle. We see a longer candle here, wick on the candle. The candle body's quite long. So what we're really looking for is something with a body about this size and a wick that goes way up, and a wick on the other side which is very short. So that shows kind of like a reversal, so we can kind of identify that. So let's go ahead and look at the Euro USD H1. Okay, now here's a typical example of a reversal candle with a long wick in this direction. There was a long wick in this direction, and it came back here in reverse, so we were expecting to go this way. We saw it again here, so we're expecting it to go back down. We saw a long one here where the wick is long, so we're expecting it to go back up. And when it entered here, it definitely went back up. But let's take a look at what the actual payout was. Whoops. Let's look at the payout, and it was only about 25 pips, which is fine, because if we're scalping this hourly chart, we wouldn't be doing it on the 1 hour, but we could. Here's a doji. Here's an entry and exit at the exact same level. No body candle in the candle, no body. Very short here to this side and very long this side, which shows a very long shadow, which shows us that we're going to get a reversal. So if we just drew a quick line from here to here, we would expect that there was going to be a breakout somewhere down here, and sure enough there was a breakout right here, but it's not going significantly higher, so you need to be able to read the marketplace. Well, 32 pips, that's a good profit. You probably would have cashed out somewhere around 15 or 20 because the market was going back down here. 10 pips to the loss, that's the drawdown. Could have gone up as high as 52 pips. So if your process was to take 30 pips out of the market and you only drew down 10, and 30 would have been about right here, so you would have been out of the market right on this candle right here. So that's kind of how to check that, check for your ingress and egress. Those are just some simple basic discussions on that subject. So let's go ahead and look at the 1 minute chart. Now if I was going to look at the 4 hour, 1 hour chart, the 4 hour chart, I would draw a line right here for an example, because I had a long wick here, so I'm expecting to put a cap right here, and expecting tomorrow when the market starts again that it'll be going in a downward direction until it shows me that it's going to reverse. So I would go ahead and look at this line here on the 1 minute time frame, which is probably about 60 bars back. So let's see if we can even see it. So not sure how many bars that is on the counting, so let's go ahead and look back at the 1 hour, and let's go ahead and select the 1 minute. Okay, there it is. It is 6:22 at 1800 hours. So let's go ahead and come back here to 6:22 at 1800 hours. So we're starting to see right around here somewhere. So right in this vicinity here, 1801, there's a good candle right there. So we'll just go ahead and put that wherever I thought I saw that. Okay, so there's the same line as in the 1 hour chart. The same line right here as is right here. So now that we're back here, we can start reading this program. We have our indicator here, which shows us going past this line after it hit the bottom line. So that means we're looking at going in a direction in which the trend is moving, and it looks like it's moving down. This bar crossed in right here, so we're going to draw a line right here. Alright, and we're waiting for this line to happen to here. Our entry is because this crossed here, and our actual entry into the market is right here, between here and here. So let's see what happened. Okay, so we take 1, buy right here. I'm going to get rid of this line. Let's see. Okay, so we're going to leave it right here. And take the backspace, and then take our new line right here. Move that back over there a little bit further. Right here when it crosses that line. Okay. Let's get the right indicator here. Okay, it crosses that line right on this one, on the entry. So we're going to enter right here. So I'm just showing you kind of how it works. Just a general description. Okay, now I'm going to draw this down a little bit so we can see this better. Alright, so our entry into the market was right here at this crosshairs. Now let's take a look at what happened on the 1 minute chart. We got about 4 pips. We were at about less than 2 pips, and as high as 53 is 5.3 pips. So let's go ahead and look to see what really happened here. Okay, now remember this was our entry point on the 1 hour chart, and notice there was a definite trend going this way, and we have a definite downward trend going this way, and this is all on the 1 minute chart. So really nothing's been happening for this period. So what I've been interested in is what's actually happening on the 4 hour chart, and we see that we're still in the same 4 hour period right here. We also know that it's going down, so we've been buying sell positions, because on the 4 hour chart, we go back to the 1 hour chart and nothing's really been happening, but we do know that we're in a selling position from the 4 hour chart. So I use the 4 hour chart to know that my direction is down, and this could bounce off the 21 moving average, and if it does and it continues to go in a downward direction, then my purchases right here at this level were pretty good, and we could see a drawdown of as much as 42 pips. So we would probably start the market with a 178 pip loss, which was the last high. So we'd have 180 pip loss, and we'd set up a trailing stop of 180. So that's basically where we would start that trade at, and then we would, if this continues to go down, then we would be pretty much interested in hanging on to the long-term side of the trade, and we may close half of the position, a third of the position, any way you want to do that. So those are just kind of the easiest way to show you how that works. I'm going to go ahead and close this tutorial, and I'm going to open up a second tutorial to make the video short for you, and come on back and watch video tutorial number 2, and I will meet you when you open it up. Talk to you later.